Hello everyone. So we went long over here and the market bounced. What's new? So in today's video, I'm going to explain to you guys why I personally don't think it's very intelligent to try to go long here unless you have a longer term horizon of maybe 2 or 3 months, or you have a tight stop loss. So going long here, in my opinion, is risky. And in today's video, I'm going to explain to you guys what the next steps are for the market and give you guys my thought process for everything. So the SP500, the NASDAQ, the Russell, the dollar, the bonds, the yields, the VIX, all that good stuff. Let's get started with the video. So before we begin, I just want to throw this picture here. Basically, I was bearish over here at the top over here. I was saying that the VIX expires tomorrow. This is going to be a bearish move. And we ended up falling. And then over here, I was bullish and we ended up bouncing. So I just wanted to throw that out there, show you guys. So obviously we had a huge move overnight. AMD really helped based off of their earnings. But now all eyes are going to be on Apple's earnings Thursday after hours. So that's going to be very interesting. Keep that in mind heading into tomorrow. So next, Powell basically kept... The Fed basically kept the rates the same. They remained unchanged. So what he said during the speech was, even if we don't change rates for a meeting or two, that doesn't automatically mean that we will not increase rates or cut rates later. So he's still giving an opportunity for some more bearishness in the future, but he's keeping the door open. He's very intelligent. He's basically like they thought this through. They're basically just keeping the door open and allowing all options open. So they're doing what they need to do. So nothing too out of the norm. That's another reason why the market didn't capitulate. And that's another reason why the market didn't really fall that much. We held support the entire time and then we ended up rallying after Powell basically did not say anything too bearish. The market ended up rallying and we ended up closing near the highs. So this is a chart of the SPY on the 1 minute. You could basically see that after we after he started speaking, the market ended up rallying and we ended up closing on the highs. So this overall was a very bullish day for the SPY, but now it's not the best time to go long. Okay, so obviously we caught the bottom. We got some good fills in for our swings. Now is not the time to start going long, in my opinion. It's better to wait for a bit of a pullback, and that would be the smartest trade to make. So let me explain to you guys why my thought process is that. So I'll give it 3 main reasons. Number 1, Microsoft starting to get really overextended to the upside in terms of the Bollinger Band. This is not a good... If you were a bull on Microsoft, this would not be a time to go long, because as we can see in the past, when we do trade outside of the Bollinger Bands, we have to return back inside. So this is not one of those times where you want to start trying to squeeze out the last few drops to the upside. You would rather either go short with a stop loss or wait for a pullback and go long alongside that pullback. So Microsoft, this is not an opportune time to go long. It would be better to be going long at levels of support, not after we already made a big bullish move. So that's number 1. Number 2, AMD. AMD is up almost 10% today. Same concept. Now is not the time to start chasing and being like, oh my God, wow, AMD's up 10%. All right, go all in. That's not a sustainable trading strategy. And I hope you understand that. So it makes more sense to either wait for a pullback or to go short with a stop loss, in my opinion, right? So that's what we're waiting for. We're waiting for pullbacks. Now is not the time to go long. I hope you guys understand that. Number 3, I'm going to go with Amazon. Amazon is up. Go to the close. Amazon is up almost 15% in the past 6 trading days. So in the past 4 trading days, sorry. So clearly, when a mega cap $1 trillion company is up almost 15% in the past 4 days, probably not the best time to go long, right? So those are my thought processes of why I mean, we're already correct. We already got. Look. I'm not saying, you know, it's not as if we have to try to look for a position, right? We're correct already. We went long over here. We're comfortable. But what I'm trying to say for new people that want to get into a trade right now, not the best time to enter. You would rather have to wait for a pullback to support, or at least a break back above 426, 427 area, in my opinion. With either of those two things, that would probably be a better time to go long. But right now, on the SPY, I would want a retest of at least maybe 418, 420. That would be a good thing. Maybe even if we gap down overnight, that would still be pretty good. So if we gap down overnight, that would be a pretty good opportunity maybe to go long as well. But yeah, regardless, just very, very simply not the time to go long. All right. So the SPY clearly bounced off. The MACD crossed above here. And when the MACD crosses bullishly above, like we see here, that generally causes the next 1 to 2 days to be flat or bullish on the SPY. Same concept on the NASDAQ. Also, the NASDAQ, just like this is also a really, really big move on the NASDAQ in general. So once again, it's not a good time to go long. And you can see that we're back to a previous level of the 23.6% fib. Obviously, these fib levels need to update. So to do that, you just drag it to the lows. And 1 second, drag it to the low here. And you can see that we crossed above the 38.2, which is nice, right? Same concept with the MACD, we crossed above. So the next 1 to 2 days should be flat or bullish, which is also good, right? And we could also go ahead and take a look at the SPX. The SPX is... All right, well, my chart doesn't want to show any drawings on the SPX, unfortunately. Wow, okay. That sucks. Well, can't really show you that, but it basically reclaimed yeah, all right, let's just skip the SPX. All right, got it to work. So yeah, the SPX, we're at the important trend line here from January 2009. As soon as we hit, so guys, I want to just really make this clear. When you have a very, very bullish move into a level of resistance, that is not the time to go long. It is much better to either wait for a pullback or wait for a retest of that zone to be acted as support. So, or, you know, break back above levels of resistance. So this is just showing that a prior level of support is now acting as resistance here, and we painted a very big bullish green candle right to that level. So that's not really what we want to see in terms of like a new longing opportunity. This is not a good time to go long here at all. So a few other things. This is the 10-year yield. It's important to look at the yields because they have an inverse relationship to the market. If the yields are falling, then the stock market should be bullish. And we could see how that played out today. The yields broke below a major level of support with a big red candle. We can take a look at the 20-year yield as well. Same concept, right, on the larger yields. And that's another thing that helped the market bounce. Another thing that we're going to take a look at is the dollar. The dollar also has an inverse relationship to the market. So, you know, you could see that the dollar painted a bit of a bearish doji candle here. This is not the most bullish candle on the dollar. So, you know, we have to see how the dollar responds right at this level of support, and if it can hold, and if we can refill this wick, basically, we refill the candle back to the top. But like I was saying in yesterday's video, the dollar is at the upper level of the Bollinger Band. So I was showing you guys this example yesterday where we could continue going up and up, but if the dollar opens outside of the Bollinger Band, then that's very, very worrisome, because if the dollar opens outside of the Bollinger Bands, that shows extreme overextension, and that would mean that the market, the overall stock market, should bounce, because an extreme overextension, if you invert that, it's a good buying opportunity for the stock market. So that's basically, we're getting close to that area, right? Like the Bollinger Band is pointed lower, the dollar is moving higher. We need to see if the dollar if they really want to be bearish right now. That's basically what we need to see. And I don't think that it's really that intelligent for banks and funds to really try to be this bearish at the moment. But let's see if the correlation between the dollar and the market persists the way that it has been. There have been some days where the dollar and the stock market move in unison. So we have to see, take that day by day. But right now, the dollar is getting a bit overextended to the upside, which is bullish for the market. And next, let's go ahead and take a look at the yields, and then we're going to take a look at the large tech stocks. So, sorry, not the yields, the VIX. So the VIX painted a very big red candle today, back to this major level of support. And one of the issues is, after a big move to the downside, now is not the time to start going short on the VIX. You would rather wait for a bit of a pullback and then reshort. So yeah, the VIX, I would be shocked to see if we can get another big red candle tomorrow and just throw the VIX in free fall. I wouldn't mind it. The longs would feel good, but it's unlikely in my opinion. So we are due for a bit of a bounce and then a continued move to the downside, in my opinion. And if you look at the Fibonacci levels, right, you can see that we should come back, either retest the 23.6 or the 38.2, and then make a continued move to the downside. So that's my thought process on the VIX. And yeah, then let's just go ahead and take a look at Apple. So Apple, we have earnings tomorrow. What happens with earnings? Generally, we run up into earnings day. So this could be an earnings run up. And by all means, if Apple gets another push to the upside, retest 175, 176, that strength will occur and permeate in the market. Same concept with this MACD. But with already a big move to the upside like this could have been the move for earnings. And once again, this is not the time to start going long, especially with earnings tomorrow after hours, and especially the fact that we're at 176, 177 resistance. So, yeah. Oh, we could take a look at Tesla. Tesla is at support, and it's it's trying to hold this bottom, but the momentum is very, very weak. So, but yeah, overall, we positioned ourselves pretty well with this bounce. We now we just have to be intelligent and be patient with where we're going to enter. And yeah, I'm looking either for a retest of 418 to 420 or a break above 426, really, ideally, right? But then the other level that you could play around with is the SPX level here, if we maintained amount above this trend line. So if swinging tomorrow is going to be a bit difficult because Apple has earnings, but the level that we would need to remain above for tomorrow is going to be around 4236, 4237. So if we shoot up and retest 4237, 4238 area here, then that would be a good opportunity to go long as well. So I hope you guys enjoyed this video. Hope this made sense. Please make sure to like, comment, subscribe, do all that good stuff. And I will see you guys tomorrow. Thank you.